while the team are trying to troubleshoot the speaker to listen to whatever questions might arise, we'll proceed with this market meet and investor highlights of Oman Cement's Q1 performance to the audience. And first of all, we thank you for your interest and booking the time on your calendar to meet and the interest to interact with Oman Cement itself. And can you make it full, zoom and content? So the regular disclaimer, whatever we are presenting here of information purpose, for information purpose only, any judgmental, any decision making should be based on your own kind of decision. And we acknowledge and agree to this from your side, please. Next. As usual, we'll continue on the slides on the facts and then the highlights and the Q&A session and the contact as we progress for any interaction subsequently. Next. So overall, we still continue with our path to be quite leading in the cement industries and support the construction overall industries by concrete value, capitalizing on our strengths to contribute to align with the Vision 2040 and bolster this efficiencies in the production of cement and construction material alike, and building a strong community around us of satisfied shareholders, among which the other stakeholders, and being quite very environment friendly and with no compromising to the brand quality and the name that we created and maintained over years. Next, please. And overall, if you can see the presentation of slides, the statistics or the quantitative statistics figures on the production comparative to the 2024 Q1, the parameters of the production of clinker as well also the sales of the cement were better by marginal. Sorry, can you come? Yes. Okay. So on the comparatives, again, only the cement production was a bit slightly lower, but also reflecting on the digestion from the market, which is merely marginally positive. As you see, it's almost 0.5% to the previous quarter. This is because of market conditions, the competitions, and also the whatever anticipated to come of no control, no protection on either the imported cement or the come across production internally in the country, which is making us a bit of a heat map that we need to focus mainly on how we really strengthen our position and maintain the relations best with the market, customers, and the regulators to ensure that this specific industry is not held captive unfavorably, and the local producers or the local cement producer stands solid in the face to supply demands even in the hard time like the 2022. An overall performance over the years, you see that the performance of the Q1 came to be positive if you compare it to the net profit margin as well also the EBITDA margin in reference to the previous period. Even if you compare it to the full year, you find it almost 28% on net EBITDA margin, and the net profit is around 16.6%. Recording 5 million riyal on the revenue and the EBITDA and almost 18 million riyal for the quarter in the revenues, and 3 million riyals for the profit. If things moves right and progress well, hopefully we'll be able to beat last year performance, provided that the market stands, I would call it comforted, no further deteriorated invasions comes to the play on the ground, as well also that stabilities on the announced projects comes to see reality rather than being quiet in the news. So these are a bit of caveated conditions to keep the performance to come positive and hopefully beating the last year performance itself. Sorry, the screen is a little bit flickering here. So that was comparative year on year plus the Q1, but this is now giving you the reflection of the Qs over the periods 20 till 2025 performance wise. So you see that also our kind of the EBITDA margin stands very robustly positive for the Q1 2025 in comparison even to the last year Q1 2024, which was 26. However, the net profit margin was almost 1%, on 1.8, 1.9% lower, but this could be catched up if the performance improved on the selling to the market. And unfortunately, one part of it contributed to this, to the non-core profit, which non-core profit coming from the surplus cash, which used to be nice and sizable and placed, as well also on the increase of a specific lease charges, which used to be charged at almost 75 or 70 to 75 basis per square meter. And now the government by 2025 for Oman Cement, we are paying 1 riyal per square meter for all lease contracts, being the plant, the quarry, the complex, the other places. So that's one impact on this specific performance of the Q1 versus the Q1 2024. With that, continue please. With that, the other ongoing projects, we are having this clinker optimization project, which is supposed to come in H2. And we are on a good track with that, which is going to create additional capacity of clinker in place, as the market also knock on demand, and specifically also new grinding station coming in place. They're also asking for a specific commitment to supply. So at least the local players, the Oman Cement and the other peer Raisut integrated cements itself, with in the south as well in the north, Sahara Cement, as also Pioneer in the north at the table in the Ras Al Khaimah side in UAE, as well also the other grinding stations, either being Arabiya, Medina, and then Bufar in the south, as well also the newcomer Al Badda'i. They can contribute positively. They can contribute positively, create sufficiency for the demand from the local producer. If, God forbid, any lockdown happens or any circumstances created geopolitical distress, so the country is supported, and Oman Cement continue to lead, to produce, to deliver. And with that, you've seen that also the performance of our stock price has been reflective of the performance. And hopefully with your clarification and interaction and whatever you have of trust in the company, this will be further blusters and positively sloping upwards. With that, I would close the slides presentations, and we open the floor for any interaction and question. So please feel free to put your question if we couldn't or if we cannot hear you. But let's hear the voices, please. Hello, can you hear us, gentlemen, young ladies? Please, if you can hear us, put your question through. I'm just joined also through my laptop. So at least we can hear your questions if you have any, or chat it over the chat panel itself. Yeah, please, once you speak, introduce yourself, so at least we follow on this.
Yeah, thank you for the presentation. My name is Sandesh Shetty from Uber Capital. So during the last discussion, you mentioned a scheduled shutdown for clinkers in May. Like, could you provide more details on this, including the average duration of the shutdown, like its expected start and end date, and the anticipated impact on 2Q25 financials? Also, the expected capacity increase once the operation resumes. Anything like any rough numbers on it?
Okay, so thank you, gentlemen. With this specific, we call tie-in, would need to be done with the major kiln that is almost K3, which is 50% of the capacities to produce clinker. And that's supposed to be taking place around end of May, overlapping June, and starting few days in the H2 July. The decision we have postponed this shutdown to start somewhere around July, so at least it takes completion before August, for the sake of continuing the production and the operation, as we had some specific unplanned shutdowns, minor ones over the last few weeks, in order to recap on the inventories and having this available buffer to continue the operation. So this is coming now adjusted almost 1 month plus to the timeline which has we proposed. Subsequently, on the capacities, it will give us something like around 700 to 1,000 metric ton addition per day of clinker, which is gonna ramp it up. Which currently we are having around 8 to 10,000 metric ton production, which will be posted almost to 10,000 plus 700 or 11,000, which is going to give around the delta between 7 to 10 to, if we stretch it over the nameplate capacity, can put into the maximum 12, 15 if things moves efficiently with no hiccups. So this is the, once it comes to the additional capacity generated from the clinker itself. Hopefully I have attended your question. If any part of the question I missed, please, you may bring it up and we'll speak about it. Else, any other question, please, from the audience and yourself?
No questions from my end. Thank you.
Thank you, Shetty. Anyone else? Hello?
Yeah, okay, I've adjusted the setting. Is it?
Yeah, it's doable now. We can hear you. Come in, please.
Perfect. Thank you. Apologies for the disturbance. So, my question is regarding the industry landscape. You have touched upon it briefly, but would you be able to put some color on how the cement industry is in Oman? What sort of, what is your market share, and how much of the market is being catered by imports, if any? With the additional capacity that you guys are adding, do you expect the utilization to remain over 90%? As it has been in the past, or do you expect, a gradual build up to that?
So let me take this, I would say it's starting from the latter end of the question to the former start. And then I'll ask also my colleague, the commercial director, to give some highlights about the market and what has been quite progress since the past years. If you recall, and you attended the other sessions previously, the market was quite having specific, I would call it, proper scrutinies on check and balances for the imported cements earlier by means of what they called it under the ROPs or the custom check. They call it quality conformity charge, which has been to test those material before get into the country or before it get to put in use. So that was there till 2022 and somewhere before the year end. And subsequently, it has been removed. It has been removed for the sake of creating sufficiencies due to troublesome with one of the peers' production units. And ever since, it has not been reinstated. This creates an open door inflows for any competition to come, either cross-border, across sea, which is continuously moving on. The unfavorable stance from the competition for the local producers, the ICV's content, which is a must to abide by and a must to keep, which we also take it as a commitment. We don't want to back off on our Omanization level. We don't need to back off on not utilize the local resources or sourcing from the local contractors or either raw materials, supply, services, which we still maintain that position. And the other peers are also trying to do with it. But the issue with this cost structure being quite year on year increasing, either in the 3%, which comes from the manpower that is given, and also the increase on the natural gas or the energy is the 3% year on year, we still face the very unfavorable unfavorable level playground or unfair level playground, wherever the other competitors are having the advantage either on very low cost structure once it comes to the major component, the energy substitution or the energy subsidy, sorry, wherever other countries they are charging cents or they are using low cheap material for the fuel like coal, which is not permitted to be used in the local per se cement industry as of now. So this is one major, I would call derailing or pressing down on the efficiencies that we could also be competing if it's level playground. Then on the quality conformity chart, which is also not making the check and balances on the quality, make it quite more open door policy on a free trade agreements, which we are fine with it if it is all like to like. And the other point on the market update, I'll allow Mr. Arif Kalam, who is next to me. He's the commercial director, to give you a bit of flavor about how the market moving. And we are trying to stabilize the forces to continue to supply to satisfy our retail.
Assalamu alaikum and good morning, everyone. So to address the question about market share, Oman Cement has had market share growth over the last 3+ years. We're maintaining a high 40s in the market share positioning right now. This does not include, because our market that we address is mostly in North Oman and not all the way down in Salalah region. So we focus on this business and we are still maintaining our market share for last number of years and also maintaining our price strategy to continue to maintain our margins. So hopefully that answers your question.
Yeah, thank you, Arif. And as a matter of fact, we are tapping with the new areas to attract new customers. Few of those customers has been brought in, and we also executive management interact with those market in order to attract them, comfort them, attend them, not just only on price side, but also on services, quality, and advices once it comes to the being a cement practitioner, cement expert. So we have that kind of support either from the existing manpower in place in OCC or even at the group if we require some support at that end. So any other question, please, from the audience? And please monitor the chat if there is any question.
Question from Ms. Ahlam.
Yeah. Ahlam, okay, Ahlam is saying, good morning, team. Thank you for this meeting. My first question is for the year 2024, so revenue growth and a healthy bottom line. What are management's revenues and margin expectation for year 2025? Are there plans to diversify revenue sources or increase exports? Okay. Smart shoot, young lady. Ahlam, thanks for this. If you go to the slides, the last two slides, we have put this Q1 performance being comparatively better in the previous periods. And if things moves in the Q2 till Q4 through for 2025 rightly, as we anticipate and project also for their budgets, we will be able to beat the last year performance, provided conditioned that there is no unfavorable forces or deterioration to the current market conditions, neither by geopolitical distress, either being quite very open, wide door for this invading competitors, or another changes of the whole game in the place in the country itself. And all those kind of pipeline announced projects comes to be quite materialized within the period remaining of 2025. This is one for the 2025 projections. The other was part of the question. What was it, Anne? Can you just show? Where is the chat here? I think we got dropped off. Unfortunately, Ahlam, we just get kicked out from Zoom and it came back here. The other part of the question after this projection, what was it? The second part? Ahlam, if you can speak up. To diversify the revenue sources on the Oman Cement. As a matter of fact, we started sluggishly last year on one part of intermediary product sales, which is clinker. But that was a shying concept. And this year, we started rightly with the market, but with a bit of, I would say, not that as per expectation quantity, but we are moving with the market to sell the clinker. We sold small quantity, and if things moves right on the pricing post the installation of the clinker cooler in July in the H2 of 2025, then this other stream of revenue coming from the intermediary product will really add to the formula of Oman Cement being quite positively trending. And hopefully that can be kind of competing at competing price with the invading suppliers, either from across the sea itself or the border. Further on diversifying revenues, I would not call it creating new product per se. The new innovation still they are working on developments, but we cannot announce yet things which is under trial. However, on, I would call it not on the top line revenues diversification, but on cost alternative uses of material, we have already started studying specific replacement raw material side, as we did last year, replacing the heavy cost kaolin with or earlier before the last year the bauxite to kaolin, and last year kaolin to red shale. So we move with this specific force of the increased pressure of cost to find alternative raw material which can be quite optimally fit per no quality compromising, and delivering the right product to the nation and the users. Further on this, on the raw material, we also work on the alternative fuel substitutions, because natural gas now comes to be quite expensive if we compare it year on year from 2025 with this escalation. And the project which we have highlighted earlier on potential use of alternative material, we are really working it at the shareholders level with one of those potential partner in the country to bring this specific JV in place. And if it comes right, hopefully by end of the year, this will be announced, and it will contribute to the additions of reduction of cost on the use of natural gas or energy in place. Clear, Ahlam? If there's any other question, please, you may put it on. If not, then other audience, please. Thank you, Ahlam. Thank you. Anyone else? Anyone does have any question? So at least you can put it in the chat if I can hear you. If I cannot hear you. Hello? Ahmed, Mukesh, and Sandesh or Shetty, if there's any additional question from your side.
Hello.
Yes, please.
Yeah, just adding to what Alam said on the guidance, could you also provide specific guidance regarding your capex for 2025 and how?
Yeah, on the capex, we've highlighted one major project is on a potential JV. If this comes, so there is a part of corporate structure for that specific requirement, equity and debt. Equity, we might need to inject this according to the finalization of the JV towards the H2 and the start of this project, hopefully towards the end of the year. Start this kind of, what do you call it, the EPC side. Commissioning, hopefully it would happen in 2026, first half, if things get into the right delivery and milestones. Further on the capex, we have this. We've spoken about the cooler, which is coming now in July, hopefully to give that additional 10 to 15% increase on the clinker production, and that's one major element on the capex. Other enhancement and tweaking of the packing plant and optimization for efficiencies in the plant are also minor projects are on consideration and planned for 2025, but they are small, not taking major impact on the availability of the plant or the huge capex outlays. Clear, Shetty? Any other question, please?
Yes, clear. Thank you.
Anytime. Any other question from the audience? I think now we've had the people whom we lost, like David. Usually, David would bring some questions. David, your mic is mute. If you would like to come up, or anyone from the audience, Peter and Pushpa. We are all ears if you have any question whatsoever. And if there is no question, then I will ask Anne to conclude. And we just keep the slides of the contact, and this is still the contact as is. And if there is anything which require further interaction with the market or reach to us on clarification, we are available. Our contact are listed here. And with that, we say thank you all for your time, for your interest, and we keep the Oman Cement Pact all together to deliver and optimize our structure to be the best. Thank you.